Hi, welcome to FinTech Decode, where we decode everything about finance, technology, and productivity. If you have not watched my previous video about inflation, what causes inflation, whether inflation is good or bad, and how to counter it, please feel free to watch that video. So let's get started. Today we are going to decode everything about how to fight inflation, how to make your money grow and increase your wealth so that you beat inflation. Let's take a step back and run through an example. Say today I'm earning $100 a year and the cost of an apple is $100. Let's say the rate of inflation today is 2%, which means the cost of the same apple next year is going to be $102. What if through the course of this year, my salary does not increase and I still earn $100 a year, which means the next year I won't be able to afford $102 worth of apple fruit. And therefore, we need to ensure that we are able to earn more money the next year or use the money or the current resources we have and let it grow and compound so that we can fight this inflation or increase in price of goods and services. Today, I'm going to talk about 5 investment strategies that you can employ to fight inflation and grow and accumulate wealth. Before I can talk about these 5 investment habits, I want to ensure you understand that I'm not a financial advisor. So all of what I'm going to talk here are things that I have personally done. If you want to jump into the world of investment, please do contact a financial advisor before dipping your toes. And with that disclaimer, let's get started. The first investment strategy that helps you grow your money is investment in stocks. Stocks are nothing but a way to buy stake in a publicly traded company. For example, Costco, the wholesale retailer, is a publicly traded company and its stock/share is bought and sold in the NYSE or the NASDAQ exchanges. Now you must be thinking, what's the benefit of investing money in the stock market? Traditionally, the stock market has grown at the rate of 10% every year, which means if an inflation on an average is about 2%, you're actually growing your money by 5%. Let's take the example of Costco itself. It's a publicly traded company and has grown at 22% in the past 1 year. Inflation today is at 8.6%, and you can clearly see that investing in stocks for the long run definitely yields great results, and you will be able to counter inflation pretty easily. The second investment strategy is investing in index funds. Index funds are nothing but a basket of stocks. The most popular index fund is the S&P 500 index fund. There are several companies or financial institutions like Vanguard, Charles Schwab, Fidelity, etc. that sell index funds. When you buy one unit of index fund, you're actually buying into the entire S&P 500 stock market based on some weighted average. So for example, if there is an index fund of say 5 companies which are equally weighted, what it means is each company contributes 20% to the index and together they constitute 100% of the index. In that case, when you invest $100 into this specific index that consists of 5 companies, you're technically investing $20 in each company. Therefore, you're diversifying your risk and also increasing your probability to grow money. Typically speaking, in the last year, the S&P 500 has lost around 12%, but overall in the long haul, for the past 30 years, the S&P 500 has grown more than 3,000%. So index funds are a good tool to counter inflation. The third investment strategy that you can employ is investing in precious metal. Precious metals, more specifically gold, has really stood the test of time and has been a great bet to grow your money during times of recession or inflation. The fourth strategy is investing in real estate. This kind of is expensive to a certain extent if you're living in a high cost of living area, but generally speaking, in the United States, the home prices keep going up and buying a house is generally considered safe. The main advantage that I feel is when you buy a house, you can rent it out, earn money, and put that money towards your mortgage. That way, you're not really paying anything out of pocket for your mortgage, but you're still building equity on the house. The fifth investment strategy is cryptocurrency. Cryptocurrency is extremely risky, is volatile, and I personally feel as of today, it doesn't really have any inherent value associated with it. I also feel that it's too ahead of its time. Eventually, I do see a unified digital currency playing a major role. That said, it's too early as of today. A simple way of explaining cryptocurrency, say Ethereum, is it's a distributed network where you can build applications and experiences experiences on that network. To build experiences on this network, you need a currency, and this currency is the Ethereum coin. So people who have Ethereum coin can develop applications, and people who have Ethereum can also use or experience these applications. And therefore, there is huge potential in cryptocurrency, but I think it's still untapped, risky, and still volatile. So be very careful when you're entering the cryptocurrency market. Those are the 5 investment strategies to counter inflation and also diversify your portfolio and put the resources that you have and the money you have to work and increase your wealth. Always remember that investing is a long-term game. In the long term, you'll end up ahead, and you should always try to ignore and stay calm when there are short-term troughs. Those were the 5 investment strategies that I wanted to share with you to counter inflation. Always remember that before you can start investing, do consult with your financial advisor. That said, if you liked the video today, please hit the like button. If you want to learn more about good financial habits, technology, and productivity, please consider subscribing to this channel.